with the guidance from the experts. Why is the Kwacha so strong, the same time the world's best performing currency? Now, by January 2026, Zambian Kwacha is trading around 20 Kwacha to the United States dollars, from highs of 28 Kwacha early last year. Over 2025, it gained about 26%. Since December alone, it has added close to 10%. Currencies move for a reason. This one did not move by accident. Let's take a look at where it started. Remember, in 2021, President Hakainde Hichilema put two people in charge of the economy who knew what they were dealing with. Dr. Den Kariaria returned to the Bank of Zambia to steady monetary policy. Dr. Stumbeko Msokotwane took over finance minister with one clear job: fix the debt and restore trust.
The first appointment we ever made was the Minister of Finance, and he was appointed alone. But we made that appointment to send a message that the economy comes first, trade and investment comes first in our efforts to reconstruct the economy.
Now, at that point, Zambia was in default. Inflation was high. The Kwacha was under pressure. Investors were watching, not committing, simply watching from the terraces. What changed? Debt restructuring came first. By late 2025, Zambia had reworked most of its external debt. Rating agencies responded. Investors followed. That reduced panic buying of dollars. Export dollars were brought back home. The export proceeds tracking framework required exporters to route earnings through local banks. Copper dollars started showing up where they should. Supply of foreign currency increased. Pressure eased. Dollar use inside the country was cut back. Fuel, goods, services, local transactions now required Kwacha. Businesses holding dollars had to sell them. Demand for the Kwacha rose. The IMF program ended cleanly. No missed targets, no policy reversals. The program closed with reserves above 5 billion United States dollars, covering about 5 months of imports. Previous IMF programs collapsed before this stage. This one didn't. What that means in real life: importers pay less for goods, fuel and fertilizers cost ease, inflation pressure slows, prices stabilize. A stronger currency doesn't solve everything at all. It removes one major headache. Why it held? Fiscal discipline stayed in place. The central bank stayed predictable. That combination matters. The Kwacha strengthened because debt pressure reduced, export earnings returned, dollar demand depreciated, confidence is back. Money reacts first when trust is restored. This time, it did. Now, in 2025, the Lusaka Securities Exchange, LUSE, saw its main index rise roughly 56% in local currency year to date, and about 84% in United States dollars terms, making it one of the top performing markets globally during that particular period. Compared to other African countries, Zambia's gains were ahead of many larger exchanges, including Nigeria, Ghana, and South Africa over the same window. Why this matters for inflation and the Kwacha? A strong stock market does more than boost investor portfolios. It signals confidence in the economy. When investors buy shares, especially foreign investors, they often bring foreign currency into the country. Now that supports demand for the Kwacha, helping reduce pressure on exchange rates, broadens financial activity, which can help stabilize prices in other markets. It encourages long-term investment, meaning money is directed into productive sectors rather than short-term speculation. A stock market that reflects real corporate growth, especially in sectors like energy, mining, and finance, reinforces confidence in the economy and the currency. In Zambia's case, this particular positive capital market performance occurred alongside improved economic stability, progress on debt restructuring, of course, and higher foreign exchange inflows tied to exports like copper. Impact on inflation. While stock market gains alone don't directly set inflation, the conditions that cause such gains, like stronger exports, more foreign capital, fiscal discipline, and currency stability, also help reduce inflationary pressure. As the Kwacha strengthens and foreign exchange becomes more available, import costs come down. Lower import costs can then help ease price pressures on goods and services, supporting the return of inflation towards single digits over time. Yes, Zambia's strong stock market performance is consistent with improved economic fundamentals and aligns with a broader story of currency strength and disinflationary momentum. Now, the Luce rally shows confidence in Zambia's recovery, and that confidence feeds back into the broader economy, including the exchange rate and inflation outlook.